One of our viewers mentioned they wanted to avoid a possible stock market crash. So we're going to take a look at a stock market crash avoidance strategy for pre-retirement or retirement. So stay tuned for the full episode. Thank you for watching. This is Richard with Wisdom Investor. We're going to take a look at the effects of a market decline or a stock market crash on your portfolio if you're invested in the stock market, and what that means for people that are in the pre-retirement phase or even early retirement. We're also going to take a look at the term what's called sequence of returns risk. Now, we're not saying there's going to be a stock market crash or decline, but we want to know what we can do about it and the effects of this on our portfolio. One of our viewers made this comment: I'm retiring soon. I just pulled everything out of the market and put in safe haven funds. Why take a chance on everything for a little gain? Use your common sense if you have any. Now, we're not saying to pull all your money out right now. Everyone has to look at their own risk tolerance and what their goals are and what their plans are with your money and when you will need it. Here's what one billionaire investor says. He says, enjoy the bull market while it lasts. He goes on to say, whenever you buy into the market, when it's selling at the present multiple of 22 times or higher, you never really made any serious money 1, 3, or 5 years out. He says, I think that's what we're looking at right now. Here's another headline: the stock market rally to a record on stimulus and vaccine hopes leaves little room for error. We're looking at the S&P 500 over a 2-year period. You can see the market crash. We've had a nice recovery. And then even after the November election, on hopes of more stimulus and vaccines, we've had one of the largest gains from a November election period to January of all time. We're looking at the S&P 500 through 2001 to 2007. When we had the stock market crash in 2001, it took nearly 6 years, all the way till 2007, for the market to get back to the previous highs. The market crash that we had in 2020 due to the virus, the recovery on that was extraordinarily quick, and they don't always happen that fast. So our viewer that left the comments wants to avoid a possible downturn in the markets. And we're going to talk about the effects of a downturn on your portfolio. We're going to look at this sequence of returns risk and its effect on your portfolio. Here's a diagram from Paul Reed Financial. Here are two different cases here, Investor A, Investor B. They both have the same returns, only the first one starts off with negative returns at the beginning and then positive towards the end. The same numbers are used in Investor B here, but they're flipped around. In this case, the better returns are in the early years and the lower returns or negative returns at the later years. Now let's look at the second scenario. Initial investment is $100,000. They need to withdraw it. $5,000 per year withdrawals at year end. So a person in retirement is going to be withdrawing money. In this case, if the stock market has negative returns in those first 3 years and then positive returns at the latter 10 years, the balance ends up being $41,660. In a situation where we had $100,000, $5,000 withdrawals at the year end, and we have positive return at the beginning of retirement or near the beginning of retirement, and then the negative returns are at the end, you see the balance here is $112,417. So our viewer who is taking their money out of the market wanted to avoid some possible negative years. They have an adverse effect on your portfolio if you're withdrawing, because what happens is this drawdown occurs at a faster rate, and then you continue to draw it down with your annual withdrawals. An investor that's getting ready to retire wants to be aware of what's going on in the stock market, because these first few years here of going into retirement or prior to retirement, if they are negative, it can be disastrous on your portfolio. Here's the chart for the S&P 500 1-year chart. And here we are at the highs. Now, right now, we don't see any signs of selling right now, but we want to be aware of what can happen if we get a market sell-off and we're in the pre-retirement or early retirement stages. So what would a sell-off look like? We're looking at Bitcoin here right now. Bitcoin's down 11% as we do this video here today, but you can see that there's heavy selling coming into the market. If we start to see heavy selling coming into the S&P 500 and other stocks and ETF funds, we'll know we need to be aware of the possibility of downturn in the markets. We took a look at the sequence of returns risk and how that can affect our retirement portfolios if we're in the pre-retirement phase or the early retirement phase of our lives. So stay tuned for future updates.